Yeah, welcome everybody to our today's panel about unlocking the value on the balance sheet. My name is Abdullah Melik Yildiz. I'm the managing director of ECOTA. ECOTA was founded by the Frankfurt School Blockchain Center, led by Dr. Philipp Sandner. And after his death, as the management team, we have taken over ECOTA and are running it now as a commerce. And today we have 5 great panelists here, one remote, Leann. And I will make a short introduction to them. So I will start with Benedikt. So Benedikt is head of blockchain at Bitkom. Bitkom is a German association that presents companies in the digital economy, including them, and on technology and economic issues. And
Thank you. Happy to be here.
You're welcome. Next one is Forma. Christian is head of treasury at the WIBank. WIBank is based in Hessen. So right now here in also Frankfurt is within Hessen, for those who are not familiar about the German structure. And the WIBank is a development bank in Hessen, Germany, focusing on economic infrastructure and social development, funding within the region. And thank you very much, Christian.
Thank you for having me.
And the next panelist is Leann. Leann is here remote, so you can see here on the other display. And Leann is the CEO of IPWE. IPWE is a global fintech company transforming the intellectual property sector with AI and blockchain technology, focusing on business analytics and portfolio management. So, so our next participant is Ralf Kubli. Ralf is a board member at Casper Association. The Casper Association is an NGO entity that oversees the ongoing evolution and decentralization of the Casper network. It provides resources to help accelerate the adoption of Casper and its growing ecosystem. So, thank you very much for that. Our last panelist is Frank Nikolaus.
Yeah.
So Frank is co-founder of Myron. Myron offers proof of digital applications for instant, affordable business financing, combining safety and yield and utility smart contracts for funds flows and operating enhancement.
Thank you.
So we are starting with transformation in the area of tokenization. And first of all, can you explain how tokenization can transform both the equity and the liability side of business balance sheets across various sectors? So, Benedikt, maybe you can start this session. Or someone else want to start as well?
Sure. I'm happy to set the stage. I feel very passionate about the fact that I think we should look at tokenization from a very different angle, and that is from the balance sheet. So you all know here, everybody talks about real world assets, RWAs, which I don't know what it is, but I know what lives on our balance sheets. On our balance sheet, there are financial instruments, financial assets, there are intangible assets, and there are tangible assets. So when you start to think about the balance sheet in this way, it becomes a lot easier to tokenize because it's clear what I'm tokenizing. I'm tokenizing either a financial asset, I'm tokenizing a tangible asset, or I'm tokenizing an intangible asset. And that makes the question and the thought process around how to tokenize that much easier. Most of the time here we spend on financial assets, right? So that's in the big room, and people think about infrastructure and so on. But when you think about the opportunity that is on firms' balance sheets and large non-financial firms' balance sheets, when you look at the amount of financial assets and certainly about the amount of cash and cash equivalents, it's very small on their balance sheets. They have a lot more assets on their balance sheets other than financial assets. So we really have to think about how we can use tokenization to actually bring innovation in capital markets, by tokenizing assets that live on balance sheets that are not financial assets.
Yeah. Leann, would you like to add something to this point?
Yeah, I think that's great. And thanks everybody again for having me here and kind of accommodating me remote and from New York City this morning, for me this afternoon for you. I couldn't echo what Ralf said even more, but one thing I do want to kind of point out is, he just mentioned like intangible assets live on the balance sheet. They do, but they're not tracked that way. They're not managed that way. So I think that's how tokenization, it's going to kind of bridge that gap. And that's why it's a really key use case for us, because I mean, if you think about it right now, the S&P 500's balance sheet is 90% intangible assets, right? We're a knowledge-based economy. In the 70s, intangible assets made up 25% of that balance sheet. So, we don't have a way to manage that and track that better. That gap, that bridge is tokenization.
Yeah, thanks for talking about the issue. I think we need to overcome some obstacles on that because we see what financial industry, how hard they are pushing to tokenize financial assets. And we're talking now about non-financial firms to tokenize and to drive the tokenization. I think that could be hard. I think it's more that the financial industry has to pave the way for the non-financial firms to get the tokenization of their balance sheets done, and also to create a natural counterparty for them to provide the liquidity.
It's interesting to hear. I'm feeling much on your side, Leann, which is the asset side of the balance sheet, right? We have to orientate ourselves a little bit always. Myron does tokenizing the business assets directly. In our case, it's receivables and inventory in the first place, but it can also be fixed assets like intangible IP or something, which I understand Leann does. And the attraction comes with the pure opportunity that you have a immutable record that allows you to tokenize the assets directly and legally enforceable in a way that it can make secured financing, or we name it usually asset-based finance, factoring, inventory financing, more secure and more accessible. I mean, we don't want to get rid of banks, but generally it's possible, or it would be possible to take intermediaries out of this. And that's very attractive because the bankers name it usually operational risks that come with document failure. By the way, just quickly, I mean, that's my background. I was for 20 years a bankruptcy administrator, court appointed. I was a financial restructuring investment. I saw all these document failures that lead to enormous haggle about priority in the capital structure. And that costs a lot.
So maybe the last point to that, now I didn't start, but maybe give the meta perspective of an association and of what we've seen times and times again is kind of the tokenization being the Trojan horse. So we have it in the financial sector, and the financial sector being very straightforward in using it. And I think we also heard it in the panel discussion before, that it's important to not think about, hey, we have blockchain technology and now let's use it to transform and tokenize, but to really see, okay, where are the use cases and how can the technology be then applied? So not think from the technology, but think from where are the use cases that we can use it with non-financial assets.
So I would now go over to the market size and trends. Given that asset-based finance is a multi-trillion sector market, what are the implications for tokenization?
I mean, as far as I'm concerned, this, I would say 10 to 14 trillion market US dollars is not tokenized at all, right? I mean, and it's super costly if you take trade finance as the most kind of complex part of it, because it's multi-jurisdictional, it serves kind of complex supply chains over many tiers. It's extremely costly due to the fact that it's not only analogous still, but there can, so many things can go wrong in documenting the connection between the assets and the financier, wherever that is. And there's a huge potential. But on the other hand, you have always to consider that it's, I mean, we name ourselves more a legal tech than a fintech because the legal framework has to be there. And there's also a lack. In our case, we have registered in Liechtenstein because they have this nice blockchain law that allows to directly pack a token to a law, a right, even into tangible assets. Wyoming, as far as I'm concerned, in the US does something similar, but that's very tiny spots on the earth, so to say. And yeah, but the potential is huge.
Thank you very much. Leann, would you like to add something to this point?
Yeah, a couple things I wanted to kind of echo sentiments. One, yeah, the market is huge. I think that, Ralf mentioned something about, kind of what is real world asset. And I think, what we're trying to do and coming at it from a much more digitally native standpoint. Right? If you think about intellectual property, particularly patents, other hard IPs that are issued by governments, those are things that are largely digitally native. I mean, when you might be in a lab creating something, but when you're getting a patent for that, you're putting that all into paper. You're submitting that to, governments worldwide in order to get a patent issued for that. That's digitally native. Tokenization of that makes sense because that gets at some of the other points of failure that were being mentioned right there, right? Is that kind of record loss, and to be able to have that all in one place is really key. And that is much more, I think, valuable from a use case standpoint, and kind of showing what can be done with that, as opposed to focusing on the technology, because that's not the key here. We don't want to focus on the technology. I use it a lot of times when I'm talking to, people on some of the issues that we're getting. And I know this is going to be discussed later, but, when we first started using cell phones, I don't think anybody went to the library and researched how cell technology worked. You didn't know. You just were like, oh, yeah, I have to be close to a tower if I can see it and get signal, right? That was back in the day. Now we just trust that it works, right? And I think we need to get to the point with blockchain is the same way. And how we can do that and ease that along, I think, is what's really need to be key and focused on.
I think what I would be interested in is, how do you think? I mean, how do banks think about that? Right? I mean, you are supporting a lot of real companies in their efforts to finance themselves. I mean, what opportunities?
First of all, I fully agree with Leann that no one really cares about the technology behind it. It just has to be there and it should function full stop. The clean and enforceable legal contract is the basic of everything. And I think two main drivers of the adoption and acceptance of tokenization are, on the one hand, the cost side. We heard in the panel before that maybe the cost reduction isn't the big driver, but I think the next panel will be about cost reduction analysis from a quantitative aspect for financial firms in the capital markets. And I think the aim for liquidity, that's one of the big drivers for non-financial firms to get these to get this liquidity. In exchange for collateral, of course, with the obstacles that come with that.
And the discount rates that reflect the risk of the collateral, right? So yes.
The more illiquid it is, the higher the haircut or discount rate.
And could you share some real world use cases about this?
I think it's really cool what Myron does. We're just watching.
So we have friendly customers which we test with our technology and the legal framework as well. And one of which is it's an interesting reseller of high-end fashion, second-hand fashion. They have a warehouse which is completely digitized, and each item is unique. And it's described and it's photographed and everything is there, and they have 80,000 items in their warehouse of kind of 5 million value. And the technology, I mean, we name it the proof of asset because in the end, it's the most important thing is that any financier out there has a clear, legally enforceable access to these items which are financed. So the smart contracts transfer the ownership each time the new items go into the warehouse, and vice versa. And that is all this huge amount of data is by a magical algorithm aggregated once a day to store it on the blockchain and get access retrospectively, because that's the issue in asset-based finance. It's always the ultima ratio is bankruptcy, which is a marketing problem, by the way, for the company that you want to finance. You always say, for proof of concept, you have to go bankrupt once, at least, just to show that it works. But I mean, you have to think it through till the end, because it's the super priority part or super senior part of the capital structure, and that meets that function. Yeah, and that works quite nice.
Yeah, about the barriers, specific legal frameworks like this in Liechtenstein are necessary to link tokens directly to asset support SPV.
So, I mean, in our case, we seem to be the first ones to do it without an SPV because we don't need it. It's another counterparty risk. If an SPV has a management, the management can sign a note by accident, right? And in the same time, you have a competition between another creditor or against another creditor. And this blockchain law in Liechtenstein generally allows it to do that without an SPV and by smart contracts, so dynamically transferring ownership. And the code is law. And in business to business, the good news is, I mean, you can agree upon, in that case, Liechtenstein law applicable, even if the company sits, in our case, in Poland, for example, and the financier sits anywhere else. In between the EEA, it's quite okay to do that. But other jurisdictions should follow suit.
Yeah, thank you. So next question's for Benedikt. So you're working at Bitkom at head of blockchain. Can you tell us about a little bit more about regulatory framework which is necessary for the whole tokenization and also to achieve the mass adoption of this?
I mean, what you just mentioned is Liechtenstein, Wyoming, and in Germany we saw, and it was discussed before, the EWPG, the German Security Markets Act, which basically allowed a few years ago to have bearer bonds and fund units tokenized on the blockchain. And then we have the Future Financing Act, the Zukunftsfinanzierungsgesetz, which allows it for shares.
Yeah.
But I think there we're still strictly within the realm of financial assets. And I think it's like a hand and egg problem right now, that the politicians, that the people in the ministries don't see necessarily the need to go out and create a regulatory framework, because there are not that many real world use cases that are going on. And so this is the place where it's always the problem. Okay, we have to bring this forward because companies need regulatory clarity to come up with a proof of concept, and then to continue the proof of concept and create a viable business model, and create good startups that become unicorns one day, if we talk about tokenization and the aspects of it in the future. And I think this is really the challenge that we have also as an association. So we have these ideas of what the future could look like, but then we have to translate that into a political language of what do we specifically need, and then normally it doesn't come to that. So we have a rough idea, a rough outline of what we want, because most of the time we don't know the nitty-gritty part of how it should look like, and then something comes out of the political realm, and we say, this is not good because this destroys our business model. And so this is like a slow and steady progress that I think we are seeing now with financial assets, and where we have to take a hard look and learn the lessons, and then see how does this apply to non-financial assets and the big use cases it offers.
I think what I'd like to add, and then maybe Leann can also comment, is, blockchain really, you have to think of it as an assurance layer, right? It's basically helps you to document certain facts in a way and at much lower cost than was not possible before. And then thanks to that, you can now establish certain facts that on items such as IP, for example, or real digitized physical inventory, not digital, digitally represented.
Exactly. Yeah.
Digitally represented physical inventory that that you can then basically use in financial transactions, right? So I don't know, Leann, how you think about this, but that's what the uniqueness of this technology is, and it enables really interesting business.
Yeah, no, I completely agree. So a couple things there. I mean, if you think about let's kind of work backwards. I love the concept of like digitizing the physical assets, and that is, you know, looking at it's kind of the cash flows that are underneath it, right? So I was watching the main stage panel a little bit before this, and you know, discussion about a use case around the financial assets and tokenizing the cash flows associated with music and art, because those have an intellectual property aspect to that. You have a copyright associated with that music, with that art, but there's a cash flow associated with that, and that's what's being tokenized. And there's a digital twin, if you will. It's kind of like that. It's kind of the real world asset. So that is the way to come into this, right? Is tokenizing the financial assets affiliated with the intellectual property, with the IP assets, is really kind of that starting point. And it kind of is towing the line a little bit and touching on things that are going to get regulators more concerned and more interested, because it's touching the money aspect of it. But, you know, I think it's a niche way to kind of create more insight and focus on this, as opposed to just looking at, you know, you're creating just an NFT of some piece of art, right? It's about the money stream that's associated with it. You're kind of easing the way into that. You know, I think that the creation of the assurance layer is really key, like you were saying, Ralf, because, you know, that it's regulatory clarity that's necessary. And I think what we've experienced is that, you know, if we're just tokenizing the patent without the money underneath of it, a lot of people are like, but why? I don't understand what the value is there. Even with providing that kind of assurance layer, putting everything on chain, having all of the data in one place, that's convenient, but then what else do you do with it? So it's got to be linked to that financial asset underneath of that intellectual property asset, and putting them all together in one place. That's tokenization.
This would be also my next question about the IP tokenization and management. Focusing on intangible assets, particularly intellectual property, what does the current landscape look like for IP financing via blockchain and tokenization? Would you like to go on there?
Yeah, I'll kind of hit on that. So it's changing that, or having that conversation in that manner. You know, to just think about IP management on blockchain is not really sufficient for a lot of the reasons I was just talking about. You know, to be able to, you know, one of the hindrances that we've run into is when you think about hard intellectual property assets. So again, this is things that are governmental grants. That is a centralized body, no matter what country you're in, that issues those rights. So these individuals, mostly lawyers, not financial analysts, not kind of finance or money people or deal makers, are thinking about always going to that centralized body for those rights. So that makes that causes an issue when you're talking about decentralized structure from an IP management. So IP financing is really how you're going to loosen those barriers. And, you know, I was at IBM before this, and, you know, I know that it's not going to be large multinationals that are going to be leading the charge on this. It's going to be SMEs that need to open those doors and be able to show that they've got assets, they need financing, and that's kind of the linkage of those together. So that's kind of how we're coming at that and looking at this, is focusing on IP from a smaller standpoint for SMEs, and helping them kind of create a story about what they're doing and building, to one, show what they've bought, and two, open that door to getting financing on the back end.
I mean, on IP use case, you know, IPWE is building on Casper. That's great. I think, you know, we've tried music. Other people are trying music. You know, it's a long way to go from, you know, digitized. I mean, it's already difficult now for special, you know, purpose firms to, you know, assemble the right rights, and you know, and then basically do fund structure. So I think that's still a ways off. Yeah. So I don't know whether you have any other comments, but you know, on the IPs.
Yeah. So with tokenization, how do you see the role of IP asset managers in finance and professional evolving in terms of asset management? towards some practices?
Well, I mean, I'll say right now, there's really no IP asset managers, as in, there are IP managers, but they don't look at it as a financial asset. So the role in changing that is having a token or having something for them to do with it, or to be able to do with it. Maybe it's, tokenizing the cash flows and understanding it from that way. But currently the practice is it's not done. And so it's kind of helping them and easing the way for them to be able to do something differently.
So, Christian, how's currently looking at the WIBank, at the tokenization? What are you currently working in with the WIBank, and which use cases can you tell the audience about WIBank tokenization?
More the traditional tokenization projects like tokenization of our funding instruments like bonds, registered bonds, and so on. So nothing really new and exciting when you're in the market of tokenizing these kind of assets, but we're exploring this area together with our mother Alaba in some kind of way, and I'm really convinced that will be the future, and in some years' time, fingers crossed, it will not take us 10 years from now that we're not talking about the market infrastructure anymore of tokenization of everything, that then the market is still there.
I have one last question. Which threats do you see in case of tokenization for the future, which can cause that it's not going to be adopted, like Christian said, in the next 10 years?
So the threats to that, I think there are two threats. So the one threat is kind of internal, like not finding the use cases that go beyond proof of concept and proving the viability of using blockchain in that sense. And the second one is regulatory, in my opinion. Of course, because you need the regulatory clarity. We have a few places where that's tested right now, and I think we need a few more, maybe bigger places where we can learn the lessons, and then it's kind of as we see with MiCA to some degree, where a lot of has happened in Germany before. And then it's been applied to MiCA, and other countries now see what went good, what didn't went so well, and can adapt on that. And we definitely need to have this learning curve in that same regard, and this will take a few years. So there are probably more threats. So be happy to be
notaries lobby, for example. I mean, if you want to tokenize shares in Germany, I can tell you what they write to the lawmakers. Right? It's a lot of pressure that they put.
Yeah, thank you. Yeah. But I'm really excited because what we've indicated today is we're massively expanding the universe of collateralizable assets, right? I mean, that's what Myron is doing, right, on a small scale, but we're and what Leann is working on, right? I mean, this is the future, basically. And so I appreciate the next panel that will speak about the cost savings. But the last time I looked, when investment banks cared about cost savings, I don't know, I haven't seen it, right? So they don't care about cost savings. All they care about is more stuff through their pipes, right? And more money made on specific instruments that they can securitize and that they can issue. So that is the opportunity. The opportunity is that, Myron is going to be a $3 billion firm in 2 years because you can scale that business model, and you go to investment banks and say, here's my yield, and they're going to get excited about the yield because they take basis points on yields that they haven't seen before, right? So that is basically the hope, right? This is how we drive adoption.
That's always a bit of a problem because, I mean, I always tell people, I mean, it's super boring yield-wise because, I mean, we can take maybe 200, 300 basis points out of the equation. The markets are huge, right? But it remains a secured financing. That's the most at best the cheapest part of within the capital structure, and nevertheless potential sell.
Yeah, thank you very much. Yeah, please.
I would one point add. I see fear of missing out if you're late to the party or not joining the party, because then you're producing at higher costs, and that will lead to your disadvantage.
Are you seeing currently some players in the market who have this problem? Probably more cost because of the Forma?
Not so far, but for the future, I think that will definitely be the case. I heard it today that also for high liquid assets where the bid offer is 1 cent, for example, but the initial production costs for investment banks are there, and if they can produce this by using new technology at a fraction of the costs that they are facing right now, that would also be an impact. Of course, the client has nothing to do with it. The client has maybe then no really cost advantage on that side, but the bank has, maybe, or some other intermediaries.